Welcome to the deep dive, everyone. Glad you could join us. Today, we're really getting into something, well, absolutely fundamental, the crude oil market. It's complex, it's global, and our mission here is pretty straightforward. We
Yeah.
want to pull out the key takeaways from the sources you shared, specifically that cognitive market research data, focusing on, what's driving it, what's holding it back, and the trends, the big shifts happening right now. Basically, a shortcut to getting you properly informed.
Exactly. And it's such a dynamic area, isn't it? Understanding this changing landscape. It's not just for, industry insiders. It's really crucial for you listening because the effects, well, they spread everywhere. Global economy, your daily life, sometimes in ways you don't even see at first.
Okay, let's kick things off then. What are the foundational things, the elements really pushing the crude oil market forward? One thing that really stood out to me from the research was just the sheer scale of the growing global energy demand, especially from those rapidly developing economies. I mean, crude oil is still the backbone, isn't it,
Yeah.
for manufacturing, transport, power generation, pretty much everywhere. You look at places like China, India, Brazil, their industrialization, their urbanization, it's happening so fast.
Right.
And that directly translates into, well, skyrocketing energy needs. It's pushing global demand for crude way up.
And what's fascinating there is how that scale works.
Hmm.
It's not just, more cars on the road eventually. It's the initial build out to roads, factories, power plants. That requires immense amounts of energy before the everyday use even ramps up.
That's a really good point. A kind of hidden demand surge first.
Exactly. It shows just how deep that reliance runs.
Okay, so beyond that basic energy need, another major driver seems to be the growth in aviation and transportation. It's easy to focus on EVs and the green push, and that's important, but
But the reality is,
yeah, the reality is jet fuel and gasoline are still absolutely vital. The world's fleets, cars, and especially commercial planes, they're still expanding.
yeah, rapidly.
So crude consumption just keeps rising because of that.
Yeah.
It's not slowing down yet in that
And
sector.
if you connect that to the bigger picture, it's about global movement, right? People, goods,
Mm.
it all still relies so heavily on these crude oil derivatives. So even with more EVs coming online, think about air travel, think about shipping, that baseline demand, it's going to be there for a long time.
Mm.
It really challenges some of those predictions about hitting peak oil demand, maybe sooner than we think. These fuels are just so embedded in logistics.
That makes a lot of sense, especially when you think about global trade. Okay, third driver. This one might be less obvious. Geopolitical interests.
Hmm.
And specifically, countries expanding their strategic petroleum reserves, their SPRs.
Stockpiling.
So nations are actively banking crude oil,
Yep.
right? To secure their energy supply, right?
Yeah.
Especially with all the tension around.
Exactly. Energy independence, or at least a buffer against shocks.
But does that stockpiling actually make the market more stable, or does it just add another unpredictable element?
Oh, it definitely adds complexity. It
Yeah.
really throws into sharp relief how energy security and national strategy are completely intertwined. And these decisions to buy up oil for reserves, they don't just increase consumption now, they mess with supply chains, they can cause short-term price jumps. It creates ripples that impact you, the consumer, even if you're not following the oil markets day to day.
Okay, so those are some powerful forces pushing things forward. But of course, no market just goes straight up. There are always challenges. And this is where it gets really interesting, I think. The major, let's call them breaking points on the crude oil market now.
Right, the restraints.
First one, global oil price volatility and, market speculation.
Always a big one.
We see these wild price swings, right? Caused by anything from OPEC decisions, political instability somewhere.
Or even just traders betting on futures.
Exactly. And that makes long-term planning incredibly difficult.
Yeah.
Risky for producers, risky for buyers.
Yeah, what's really striking is just the sheer number of um, unpredictable factors. Like you said, OPEC, politics, but also, a hurricane in the Gulf, a drone
Yeah.
strike. Anything can send prices spinning. It's this constant dance between actual supply and demand and just sentiment, market feeling.
A shaky foundation in some way.
It definitely keeps everyone on their toes. And it has huge impacts on national economies, not just companies.
Okay, moving on. A really significant restraint, and one that seems to be gaining steam, is electrification
The energy transition.
and the rise of renewables. Countries are pouring money into solar, wind, EV infrastructure.
Massive investments.
Yeah, and the aim is clear: cut carbon emissions. This whole shift, it's gradually weakening that global dependence on fossil fuels, oil included.
And if we look at the big picture here, this isn't just like a minor adjustment. It feels like a fundamental transition starting in the global energy mix. It's not just a trend, is it? It's more like a long-term reevaluation of where we get our energy from. It's going to reshape everything over time.
A massive reevaluation, absolutely. And tied right into that is the third restraint, carbon targets and tougher environmental rules.
The regulatory pressure.
Exactly. You've got the Paris Agreement, you've got national climate laws popping up. They're all putting serious pressure on companies to decarbonize.
So what does that actually mean for oil companies on the ground?
Well, it raises big questions, right?
Yeah.
About the cost of actually complying with these rules and the innovation needed to meet the targets. It basically changes the economics of the whole business. Extracting oil, refining it, it gets more expensive, harder to justify long-term environmentally anyway.
It's a definite squeeze. It forces change, whether through cost or through outright regulation.
Okay, so we've got these drivers pushing up, these restraints pulling back. What does this all mean for the future? Let's shift to the key trends, the things that are actively reshaping the industry as we speak.
Right. What's emerging now?
First up, seems to be more investment in enhanced oil recovery EOR and also unconventional sources.
Getting more out of old fields and tapping new, trickier sources.
Yeah, think about the U.S. shale boom or Canadian oil sands. Producers are using clever tech, right? Fracking, horizontal drilling. You even mentioned Kuyu injection, using that to squeeze more oil out of fields that might have been seen as, well, nearly finished.
Yeah, the Q-Euros injection is particularly interesting.
How does that work exactly? Why is it significant?
Well, it does two things, basically. It physically pushes more oil towards the production wells, like sweeping it out. But it also mixes with the oil down there and makes it less thick, less viscous, so it flows more easily.
Ah, okay.
This means you can get significantly higher recovery rates from fields that maybe only gave up, say, 30 or 40% of their oil with older methods. It essentially expands what we define as recoverable reserves, makes previously uneconomic oil economic. It's quite remarkable technology.
It really is clever. Okay, shifting from tech back to market strategy, we can't ignore OPEC plus LIPE.
Definitely not. OPEC and its allies.
Their production strategies, the shifting alliances, it's constant maneuvering. These big oil-producing nations, they're always tweaking output quotas, trying to stabilize prices, keep the market balanced or tilted in their favor.
It's a constant balancing act.
And these decisions they make together, they're critical, aren't they, for global energy stability? They're juggling their own national interest against what the world needs.
Absolutely. And it is a delicate balancing act.
Right.
The research really points to how quickly these alliances and strategies can shift too. It creates its own kind of uncertainty, separate from just, physical supply issues.
Yeah.
Every single decision they make about pumping more or less oil, it has huge implications globally.
Yeah.
For supply, for prices, for energy access, everywhere. It affects you.
Okay, and the third key trend, this feels very current, automation and digitalization.
Yeah, tech creeping into the oil field itself.
We're talking AI, Internet of Things, sensors, predictive analytics.
All the buzzwords, but they're actually being used.
Right, to optimize how things run, cut costs, prevent breakdowns before they happen.
Reduce that expensive downtime.
Exactly. And you hear about the rise of digital oil fields, especially in those really tough, expensive places like deep water offshore. Can you maybe paint a clearer picture? What does a digital oil field actually look like in practice?
Sure. So imagine an oil field, maybe offshore, like you said, or a large onshore area. Instead of just relying on periodic checks, it's blanketed with sensors. IoT sensors on pumps, valves, pipelines, down the wells themselves, feeding data back constantly.
Okay.
Then you have AI algorithms analyzing that flood of data in real time, looking for tiny signs of wear, predicting potential failures, optimizing flow rates. You might have automated drilling systems that adjust based on the rock formations they hit, guided by this data.
Wow.
It allows operators to often run things remotely, reducing the need for people in hazardous spots. It makes the whole process much more efficient, potentially safer, and helps extract more oil more effectively. It's fundamentally changing how oil gets found and produced, especially in those really challenging, high-cost environments.
So quite a journey we've taken there, through the drivers, the restraints, the key trends, really shaping the crude oil market. And just a reminder, all these insights we've been discussing, they're pulled straight from that detailed cognitive market research.
Yeah, it gives a really solid foundation for understanding these shifts.
It definitely feels like a powerful lens into how this absolutely essential global market is, well, evolving right before our eyes.
And I think what really stands out from our chat today is just how interconnected everything is. None of these forces, the drivers, the restraints, the trends, none of them operate in isolation, do they? They all push and pull on each other in really complex ways, sometimes surprising ways.
Absolutely. Which leads me to a final thought for you, the listener, to maybe chew on. Considering how deeply tangled geopolitical goals, environmental aims, and all this new technology are within the crude oil market, what might be some of the unexpected ripple effects, the knock-on consequences for global stability, or even just for our daily lives that maybe we haven't even started to fully grasp yet?
That's a good question to ponder.
Something to think about. Well, thanks for joining us on this deep dive today, and we definitely encourage you to keep exploring, keep asking questions, continue your own journey of discovery.
Great to be here.
Today we're tackling, well, a massive topic, the future of the global crude oil market.
Yeah, it's huge.
We've got this stack of really insightful projections from Cognitive Market Research. Covers everything from 2021 right out to 2033.
Pretty long view.
Exactly. And our mission today is basically to cut through the noise, pull out the key insights, and give you a clearer picture of where this absolutely critical market is headed. Okay?
Sounds good.
Let's unpack this.
And I think what's really striking here, it's not just the sheer scale of the numbers, which are enormous,
Right.
but it's what these projections seem to reveal about, global energy demand, economic shifts, really challenges some common assumptions over the next decade.
Okay, let's start with those big global numbers then. Just try to simplify them a bit. In 2021, the global crude oil market, its sales revenue was just shy of $3 trillion.
Almost 2.9 trillion, yeah. A massive baseline.
Then by 2025, that's expected to climb over 3.4 trillion. And here's where it gets really interesting, looking further out. By 2033, the projection has a staggering $4.7 trillion.
Wow.
Yeah. Growing at a compound annual growth rate, the CAGR that averages out the growth, right?
Yep, the year-over-year average.
At a pretty robust 4.1%. So what does this huge sustained growth actually tell us, especially with all the talk about energy transition?
Well, that's the core question, isn't it?
Does it maybe challenge that idea of a really rapid decline for fossil fuels?
I think it does, or at least complicates it significantly.
Yeah.
While the West is definitely pushing hard on transition.
Right. A lot of policy focus there. Yeah.
Exactly. But these numbers suggest this robust expansion is, well, largely being driven by industrialization, by urbanization, particularly in the global south.
Oh, okay.
So if you connect that to the bigger picture, it just underscores this persistent and, frankly, significant global reliance on crude oil.
So not shrinking.
Not over this time frame, no. The projected growth points to a vibrant, expanding market. It implies that the energy transition isn't some uniform global sprint. It's more like a multi-speed race.
And crude oil is still fundamental for...
For foundational economic development in many, many regions. It's like the bedrock.
Okay, so the global picture, surprisingly strong growth. But where is this growth actually happening? Let's zoom in a bit.
That idea.
The Asia-Pacific region, it's already the largest market shareholder, kind of the undisputed engine here.
Absolutely.
In 2021, it stood at over $1.2 trillion, forecasted to hit over $2 trillion by 2033.
Just enormous growth there.
And with a really impressive CAGR, nearly 4.7%. So who are the real power players driving this? What's behind this huge surge?
Well, the dominance of Asia-Pacific is just undeniable, like you said. Biggest market share, highest regional growth rate.
Right.
But when you drill down, the story gets even more compelling, I think. China, naturally, leads in absolute terms. They surge from around $400 billion to a projected $705 billion by 2033. Huge numbers.
Still massive growth.
And this is the really interesting part, the bit that tells us about future demand centers.
Yeah.
It's India.
India.
Their growth is explosive. They show the highest individual country CAGR, over 5.6%.
Wow, 5.6.
Yeah, revenue rocketing from about $147 billion to $283 billion. That's not just growth.
No, that's a statement.
That's a profound signal, right, of their accelerating industrial needs, consumer demand. It could genuinely reshape trade routes, maybe even geopolitical alliances as they look to secure that supply.
Absolutely. And other players there.
Oh, yeah. Still substantial figures from Japan. They grew to around $293 billion.
Yeah.
South Korea, Australia, Singapore, Taiwan, they're all significant.
Yeah.
And Southeast Asia as a bloc is projected to reach over $176 billion. It's just a powerhouse region.
Really paints a picture. Okay, let's shift gears, move across the globe. North America
Hmm.
posted over 758 billion in 2021, projected to hit nearly 1.15 trillion by 2033.
Still very significant growth.
Yeah, the CAGR is around 3.5%. Now, this growth is substantial, but I'm curious, given the big push for EVs, renewable mandates, especially in the US,
Right, that policy environment.
what is this continued crude oil expansion signal for a developed market like North America? Is it mainly about, say, export capacity? Or is internal demand stickier than maybe some predict?
That is a critical question. And the U.S., it clearly leads in volume, projected to grow from over 624 billion to nearly 930 billion by 2033.
Still the giant.
Absolutely. But while that focus on cleaner energy is strong, this continued growth suggests maybe a less dramatic internal demand drop than some might expect,
Yeah.
especially for things like heavy industry, heavy transport. Those are harder to electrify quickly.
Makes sense.
And what's particularly interesting, actually, is Canada. They have a higher CAGR, over 4.2%,
Oh, interesting. Why is that?
growing from 78 billion to 128 billion. Canada's growth often reflects its role as a major producer and exporter, its ability to meet its own needs and contribute to that broader global demand we were just talking about.
Right, feeding into that global picture.
Exactly. Yeah. And Mexico also shows solid growth, projected to reach over 85 billion. So still a very strong region overall.
Fascinating dynamics there. Okay, let's hop over to Europe.
Europe, right.
Their crude oil market reached over 563 billion back in 2021, aiming for around 860 billion by 2033.
So still growing, CAGR around 3.6%.
Yeah, a bit higher than North America's actually. What are the unique characteristics or drivers here? It's a mature market, but clearly still growing.
It is. And you see Germany playing a big role,
Yeah.
climbing from 122 billion to nearly 200 billion by 2033.
Significant.
The UK also contributes substantially, growing to over 115 billion. But I think the story in Europe isn't just about volume. It's about these shifting dynamics within mature economies.
How so?
Well, are we seeing continued reliance for very specific industrial processes, or is it more about just meeting consistent transport needs that haven't transitioned yet? The data also shows steady growth in other major markets like France, Italy, Russia. And interestingly, you even see smaller, stable markets included, like Luxembourg, started near 4 billion, expected to reach almost 5 billion.
Tiny Luxembourg.
Exactly, which maybe hints at, unique regulatory environments or logistical niches within the continent's complex.
It really is diverse.
No.
Okay, let's turn our attention south to South America.
Okay.
Recorded over 183 billion in 2021. Expected to grow to over 308 billion by 2033. Which nations are really driving this emergence? What does their growth imply?
Brazil really leads the charge here. Forecasted to reach over 114 billion by 2033, up from nearly 69 billion in 2021.
That's quite a jump.
It is, and it reflects, its significant industrial expansion, growing consumer base, plus its role as a key oil producer itself.
Right, producer and consumer.
Exactly. Argentina also shows pretty solid growth, moving from about 31 billion to 55 billion, and then countries like Colombia, Peru, Chile reaching over 27 billion. They also reflect these consistent upward trends.
Well, it's broad-based development.
It indicates a broader regional development pattern that, again, continues to rely heavily on crude oil for its foundational energy needs as it grows.
Got it. Now, the Middle East, can't talk oil without the Middle East.
Absolutely central.
Their market totaled over 136 billion in 2021, expected to hit over 227 billion by 2033. What does this steady, significant growth tell us about the traditional powerhouses, their enduring role?
Well, the Middle East is, of course, just foundational to crude supply. And while their internal market size is significant, growing from 136 to 227 billion,
Yeah.
what's maybe more telling isn't just the growth figure itself, but the sheer consistency, the centrality of their role in the whole global system.
The bedrock, again.
Kind of, yeah. Saudi Arabia obviously remains a massive player, projected growth from about 31 billion to nearly 52 billion. The UAE also shows strong growth, increasing from 16 billion to almost 30 billion, plus important contributions from Turkey, Egypt, Qatar.
Right.
It's just a reminder that no matter where global demand shifts, these traditional producers remain critically important for, well, stability. They're the reliable backbone, almost.
Makes total sense. Okay, finally, let's look at Africa.
Africa, yeah.
The continent recorded over 61 billion in 2021, with growth expected up to over 102 billion by 2033. What signals are we seeing from Africa regarding its evolving energy demands?
We're definitely seeing clear signs of expansion. It seems driven by development, population growth.
Key drivers.
Yeah. Nigeria shows growth from about 9.4 billion to over 16 billion. But South Africa is particularly notable.
Oh, really? How so?
It surges from almost 22 billion to over 39 billion.
That's quite strong growth.
It's very robust.
Yeah.
And that kind of growth in places like South Africa, it likely indicates a growing internal demand for industrialization, for infrastructure, and expanding consumer base.
Hmm.
Again, solidifying crude oil's role in their ongoing development trajectory.
Wow. Okay. We've covered a lot of ground there.
We certainly have a global tour.
So let's try and wrap this up. What does this all mean for you listening? We've journeyed through this vast landscape of the global crude oil market, uncovered some, frankly, remarkable projections from 2021 right through to 2033.
Definitely remarkable.
From Asia Pacific's commanding lead, India's explosive growth really reshaping future demand,
Any key point?
to the steady, resilient performance we see in North America and Europe, despite other pressures,
Hmm.
and of course that foundational role of the Middle East. It just seems clear the market overall is projected to expand significantly.
Yeah, the numbers point that way.
It really does challenge that simple notion of a rapid, uniform global energy transition, doesn't it?
Yeah.
It highlights this more nuanced, multi-speed reality of energy demand worldwide.
Precisely.
We really hope this deep dive has given you a clearer, maybe more textured understanding of these absolutely crucial energy trends.
And maybe raises an important question for you to consider. Given these consistent, pretty robust growth projections for crude oil demand over the next decade.
Especially in developing economies.
Exactly. What does this actually imply about the global energy transition efforts? And maybe more pointedly, how might these figures influence future energy policies, technological innovations, perhaps even investment priorities by the time we get to 2033? Something to think about.